Good day everyone. Today we're going to talk about Warren Buffett investing approach and how it's developed over the years. When Warren first started investing, he used the Cigar Butt investing approach, which he learned from Benjamin Graham, the father of value investing. The main standard for this approach is finding cheap stocks that are selling way below what they're really worth. Yet, those cheap stocks are cheap for a reason. It might be because their earnings are shrinking or they're losing market share. Yet, they have become so cheap to be ignored. So, like an abandoned cigar butt that you find on the street that still has one puff in it, Warren used to pick up those cigars, get that one puff, make the money, and move on to the next one. Oh, and by the way, Berkshire Hathaway itself, when Warren first bought it, it was a cigar butt investment, but that we will leave for a different video. Charlie came and everything changed. Instead of focusing on fair businesses with good prices, Charlie urged Warren to focus on great businesses with fair prices. So they looked for those things when investing in companies. First, they wanted to see that the businesses have a durable competitive advantage, or in their own words, a moat. Second, they wanted to see that the company has a good management. Third, a company that its earnings will grow in the future. And the most important thing is that the shares are selling at a fair price.